Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily NVIDIA report for Tuesday, July 29th, 2025. Let's take a look at the charts. Start with the big picture as always, work our way into the day itself. It was 5 weeks ago that we settled above the 149.76 one-year channel top, then indicating, I mentioned at the time within 2 to 3 months or sooner, could be 3 to 5 weeks, that we would reach the 177.41 2.5-year channel top. And we are now testing it officially because we're pushing into that 1% zone. The 1% zone begins at 175.63. So we actually did that on Monday for the first time, and here we are. 177.41 is the resistance on the weekly chart that may well contain buying through August into September. From here, we could fall away to 149.76 within a couple of months. And even lower. And in fact, in terms of the even lower possibility, we're going to be watching this rising channel bottom on the daily chart that is presently 154.50. I am concerned that a settlement below this structure would foretell then a downside violation of 149.76. But I don't want to get too far ahead of ourselves. Bottom line, the upper 170s remain your ceiling of resistance that is sellable, not only if you've already long, say from 5 weeks ago above 149.76, or more recently, it is an area to take some profits because the risk then becomes to the downside. Now, I will also mention in the same breath that if we close this week above 177.41 by, yet again, a 1% margin of 179.18 or higher on Friday's close, we enter our next long-term buy signal. And so if you held any of that long position, didn't sell it, that's obviously that would be a great scenario for you if we were to close 179.18 or higher. And this is also, if you're long right now, there's no sell signal. And so there is a way, in terms of trade execution, I think you should also always take some profits when you start hitting a significant resistance area. But we are in, at least according to the last 4 months, in a bull market that has yet to dissipate. That would come to an end with the settlement below 154.50, FYI. But I do think from the upper 170s, we could fall back into the mid 150s and climbing by the end of August. I think that is a very real possibility. But getting back to my broader point, which is in terms of managing your trade, taking some profits at 177.41, yes. But there's nothing to say that we wouldn't close Friday at 179.18 or higher. And if we do, then holding the balance up to 219.64 is a great play. And that would be my suggestion. In terms of exiting a long position, selling some, a third, half at 177.41, and then the balance could be a simple, we can go into that right now. It could be closing today below 173.14. I think a settlement today below 173.14, that would also be below yesterday's, that is Monday's, low of 173.97, pivots the market south into later week. Within 3 to 5 days, 164.57 would be expected. So there you have kind of your 3 to 5 day swing trade to the downside. Until then, we could bottom out today at 173.14 and continue chipping away at the 177.41 long-term resistance. We missed that by just less than a half a point in terms of an actual testing of this resistance area. The same formation on the daily chart is at 177.30. For those of you who really like to dial in your resistance, I'm now talking to day traders, aggressive day traders. It does really begin at 177.30 on the daily chart. If we close today above 177, let's just go with 177.41. And that is once again the long-term resistance on the weekly chart. Give yourself a little wiggle room. But I don't think you necessarily need the 1% violation threshold. And I am once again talking to kind of the 3 to 5 day swing trade crowd, that if we close today above 177.41, which would also be above the same structure on the daily chart at 177.30, we could, by Friday's close, reach 186.39. This is nothing more than kind of a, I don't want to call it Fibonacci because 50% is not a Fibonacci level, but if you take the January high and you subtract from it the April low, and then you take half of that and add it to the January high, you get 186.39.
If you're finding value in this analysis, it's only a glimpse of what we offer. Your real trading edge starts at wickedstocks.com. Each week, premium members receive 2 high-probability stock picks. Each one comes with a complete trade plan, including exact entry, profit target, stop loss, and regular updates so you can manage the trade with confidence. You'll also get daily video analysis in the top traded markets, the SPY, the Triple Q, and NVIDIA, highlighting the key price levels, trends, and trade setups we're focused on. Whether you're day trading or swing trading, these insights help you zero in on the highest quality opportunities with clarity. Try it all free for 5 days. Cancel at any time.
But it really is, over time, the full swing that I would expect if we were then to close the week Friday above 177.41 by that full 1% margin. And then we've got the same exact highs and lows that I just mentioned at 186.39 for the 1.5, the 2.0, the full swing to the upside takes you to 219.64. And that would be the longer term objective if we were to close Friday at 179.18 or higher. Let's get back to the downside in terms of the day itself. 173.14 is your support for the day. We could trade inside the 173.14 to 177.41 area all day long, perhaps. And if we close today below 173.14, a good high for the week, the next 3 to 5 days expected to yield 164.57. 164.57, respectable 3-month channel bottom in its own right, can absorb selling for the week itself through next week, and from here we can push back into that 177.41 region. So this is your 2 to 3 week swing trade. If you're a 2 to 3 week swing trader, you're selling 177.41 and then holding out for or anticipating bearish rotation back to 164.57. This could be within 1 to 2 weeks, and we could play inside of that range for several weeks. Closing below 164.57, 154.50 likely then within 1-2 weeks at the most. This structure one that can contain monthly selling pressures, and from here we can round up into September. I was going to say something, and I don't know if I've already said it or if I forgot, but 177.41, your resistance, sellable resistance, anticipating the 164.57 formation within a week or two. I know what I was going to say. Once again, and I think I've already said it, you can sell 177.41 now, 3 to 5 week swing traders, anticipating bearish rotation to 154.50. And in fact, I'm going to say it again in a different way, because we have technically already tested this by pushing into the 1% zone. So for those of you who are looking for the path of least resistance, at least technically, I think right now it skews ever so slightly to the downside. It becomes even more so really with the settlement today below the 173.14 level. But what I really want to say is holding below 177.14, 2 to 3, 3 to 5 week swing traders can now play the short side into the mid 150s and climbing. That's what I really wanted to say. Now, of course, your stop loss should be above 179.18, at least through the rest of the week. And if we close 179.18 or higher, then we see 219.64 over the next 2 to 3 months. And once again, if we just close today above 177.41, now, if you wanted to add the 1% threshold on an intra-week basis, that's not a bad call. But I'm talking to more 3 to 5 day swing traders. I just think that if we close today above 177.41, we could see 186.39 rather by the end of the week. I think I've said it all. I want to mention that wickedstocks.com puts out 2 stock picks a week. We'll be putting those out here today, tomorrow. We did 2 last week. You also, with a subscription, get daily Triple Q and daily SPY analysis, the 2 stock picks a week, weekly Apple stock analysis, weekly S&P 500 index and NASDAQ 100 index analysis. And that's all for a very reasonable $47 a month. We offer it for free for 5 days upfront. You can see it all. At the very least, you can see our stock picks, a number of which are still pending, very close to eliciting buy signals. Our track record is actually pretty good this year. It was last year as well. For the year of 24, 70% plus accuracy rate on our buy signals. And so there you have it. Now, I'm not saying past results are an indication of future performance. That needs to be said because, you can get into a state where the market just sort of falls apart for some unforeseen fundamental reason, and the buy signals then don't play out as well. But we're in a state right now, in the broader sense, where the market is still strong, and I'll leave it at that. Please click like, share, subscribe. I will be back tomorrow, of course, with Wednesday's NVIDIA report. You have a fabulous day.